Hello, everyone. Welcome to VRIC Media, your most trusted voice in metals and mining. I'm your host, Darrell Thomas, and today we have the pleasure of interviewing the man himself, David Lin of the David Lin Report. How you doing today, David?
Thank you very much. I'm doing very well. Thanks, Darrell. Thanks for having me here.
Yes, you don't. I don't know if you realize like how many people you inspire. So it's almost like I feel like I may be older than you, but I feel like I'm a child, like financially in the financial space. And I grew up watching you, and then now I'm interviewing you. So
I appreciate that. That means a lot, because you run a great show, and VRIC is a great organization. So yeah, that means a lot from Darrell coming from another host. Appreciate it.
Yes. So just kind of a typical thing I do with hosts is, we interview a lot of different perspectives, and we obviously are into the space, and we invest and deploy our capital in different ways. And so I just want to start with your overall view on the U.S. economy, just kind of where do you think we're headed? What do you think, and how are you processing the Fed decisions and rate cuts and AI bubbles and all of those different concepts? And so just want to get your overall take on what's your perspective on all of that?
Yeah, AI does look overvalued, has been for quite some time if you compare it to peers, and even just, the overall metrics for comparing growth in tech companies. And of course, people have been talking about circular financing, one company investing, in others, Oracle investing in, different companies that are competitors, technically, NVIDIA investing in OpenAI buying chips from AMD being a competitor to NVIDIA. And so there seems to be a lot of money circulating back and forth, which partly has caused the run-up in valuations recently. And in the last couple of weeks, investors, as you know, have been a little bit jittery about tech stocks, because even though some companies have beat earnings, NVIDIA, for example, still went in the red the next day, which is what happened earlier. It doesn't feel like there's an AI bubble in the same sense that Pets.com collapsed in 2000. That company had no revenue, whereas NVIDIA had $54 billion. I think they just announced their earnings. So we're living in a very different time, and it's no surprise that people are concerned about this, because we have tech executives like the Google CEO himself admitting, in verbatim, that once this AI bubble is over, he said, we may potentially see a very different economy. He was making a speech earlier this week. As to how you make an investment decision around that, I think it's important to know that nobody knows when the bubble is going to pop. And I think there's other macro variables to look at. So back to your question about how I view the economy overall. So we do have, let me just pull up my screen here. We do have some employment data coming out this week. So the jobs report came out earlier this week. The U.S. added 119,000 jobs in September. This is the last available government data point that we had before the shutdown, exceeded an average of nearly 100,000 jobs added per month. We did get the unemployment number coming out this week, 4.4%. That's the highest this year so far. So, yeah, highest level since October 2021. Still, the unemployment rate remains low by historical standards, which is true. The Fed's target for unemployment, I think, is around 4.4, 4.5%. October was also, I think, the second highest month this year for layoffs. Basically, the Fed's own staff were projecting higher layoffs as well. It goes to show that not only is the economy weakening, expectations are that it will continue to weaken on the labor front. The University of Michigan survey consumer sentiment index. Let me just pull up this chart here. So this actually is an interesting chart, because it's kind of a coincident indicator to what's happening in the economy. This is the second lowest level in history since 1981. Index of consumer sentiment. Yeah. I don't know exactly what number, but it looks like it's a second lowest level in history. I actually interviewed Joanne Shu last week, and she is the director of the surveys group at the University of Michigan. So her team puts this together.
Wow.
And we had a conversation about this, and what's happening is people are really concerned about inflation right now, as inflation expectations have ticked up, and the actual CPI reflected that. Inflation, as you know, has gone up dramatically since the beginning of the year. Now, early in the year, we had rising tariffs that really hurt consumer confidence. Small business confidence was hurt as well. And right now, I think the biggest hurdle to economic growth is uncertainty around trade and fiscal policy. So without certainty and clarity as to whether or not tariffs are still going to exist or maybe even escalate, small businesses are putting the pause on hiring, on CapEx. That's why we have such low hiring in the economy, despite one blowout report, which doesn't really indicate it much in the grander picture. So it really seems to me like until there's more certainty, we're going to continue to get stalling in hiring and CapEx from businesses. And people are starting to talk about the permanent layoff, which means if you get laid off now, it's going to be very, very, very hard to find another job. So the economy is definitely weakening right now as we speak. As to what to do with our investments, I'm not a financial advisor. I'm not a professional investor myself. And I made a point to say this several times on my show, and people know me for being a host, not an investor. But the investors on my show have switched to a more cautious stance. But earlier in the year, it's important to know that earlier in the year, the people that were very bearish before have switched to a more neutral stance, if not more bullish. That has switched back to bearishness in some cases. So right now seems to be a period of pivoting. So the people that were more bearish have switched to more neutral and bullish. The people that were more bullish have actually switched to the other side. So it looks like there's a lot of conflating data that's making people switch. I interviewed Anna Wong, who is the chief economist at Bloomberg Intelligence for the U.S. side. And last year, she was pretty bearish on the economy. She recently, as of when I interviewed her a month and a half ago, she was more bullish than last year. I don't know if she switched her stance again.
Yeah.
So I think right now it's just a period of continued uncertainty and a lot of rotation in capital.
Yeah. So there was, obviously we had the longest shutdown in history. We had Amazon come out with a lot of layoffs. We had UPS come out with a lot of layoffs, and then we had a huge job revision back in August. And so I was kind of wondering about that. But then, I was reading Ray Dalio's recent piece on the Fed stimulating into a bubble, and he mentions that stocks are at an all-time high. The unemployment rate is at a historical low. He mentions consumer credit and such, and so it was pretty interesting. So it seems like there's two tails of the economy for sure, but and there's competing data points, and obviously we had some delays in some of the data that's going to be coming out. So just wanted to get your perspective there. So looking at recently, the amount of volatility in the markets, obviously Bitcoin's down over, I think, 30%. I think it went down over 30%. And then we had many sell-offs in the equities. You mentioned NVIDIA's earnings, which they beat, could not hold up the market. It reminds me of the meme where the Mag 7 stocks are portrayed as these light poles holding up an apartment building. And so, when you're looking at the S&P 500, right? And so, there's been a lot of volatility. Gold and silver have remained pretty strong. Just curious in your take there, especially related to the repo market, where there was some stress there, and I guess some of the institutions and hedge funds needed liquidity, and the liquidity wasn't available, and so often that leads to selling of assets, plus like the rate cut expectations. And so just curious in your perspective on all of that. How are you thinking about that?
Well, in specific to the repo facility that was tapped, let me just pull up this article here. I think you're talking about this, right? Banks tap. It wasn't really hedge funds. It was mostly banks. Largest access to the Fed standing repo facility on record since 2021 when it was first announced. Talked to some people about this, and it's really not that big a deal. Every month they kind of do this. So this is normal. It just happens to be the biggest number on record. I've interviewed several people on banking, and nobody seems to be expressing concern about another financial system collapse in the scale of 2008. Banks are better capitalized now than they were before, and right now the concerns that people have about the economy are not centered around the financial industry. So I'm not too. And I've actually run titles and videos about a potential banking collapse, and they've gotten no interest. So it actually, not only is there not a lot of interest from the economists and investors, there's no interest from the general public right now. Of course, people are always interested once the banks start to collapse. So if we
sure.
ever start seeing Zions Bancorp or Western Alliance, both of which have reported bad loans in the last month, which is why the stock went down, then maybe we'll see some more news. But right now, that's not really a concern.
Okay, gotcha. And then, so what do you attribute to like some of the volatility? Do you think it was more of the rate cut expectations or just overheated?
That is a question that I ask all the time, and I haven't had a consensus. Let me just give you some answers that I've gotten myself. So yeah, on the one hand, the Fed has signaled that they're less certain about continued rate cuts going into next year. And ever since they made that announcement at the last FOMC meeting, we had markets kind of becoming a little more jittery. So as soon as Powell said that at the last FOMC meeting, the CME Fed Watch tool projection of the percentage or the probability of a Fed rate cut by December fell from 90-something% to 66%. It's still very much baked in the cake. If you look at betting markets, for example, there's an overwhelming possibility that they'll cut. But the path forward for the Fed funds rate looks a little less dovish than a month and a half ago. So that's number one, because inflation has ticked up. So for tech stocks, yeah, I don't know. I don't want to say that it's the tech bubble popping, because a 10% correction is normal even in bull markets. And in fact, recently I was reading an article, David Solomon, CEO of Goldman Sachs, in a Hong Kong conference, in a summit in Hong Kong, said that 10 to 15% corrections are what he's expecting going forward. I think the Morgan Stanley CEO affirmed that. They were in the same panel together, even during bull markets. I think people have just started taking profits before the end of the year, and volatility at this level, really, when you look at bull markets in the past, are not out of the ordinary. So there's that one narrative. I'm more interested to see why Bitcoin has fallen so much, whereas the stock market hasn't. And traditionally, Bitcoin has moved in the same direction as the stock market, and the stock market has gone down, but the beta to the downside this time is even bigger. And as you know, Bitcoin is down on the year, whereas the S&P and the NASDAQ are still up. So that, to me, is more of an interesting narrative than simply why there's some volatility. Volatility happens for all sorts of reasons. And right now, we're not seeing a market crash at the level of 2008 or 2020, where there's one definitive narrative as to why things are collapsing. Because it's not.
Yep, gotcha. Okay, cool. Appreciate that. So I want to get your perspective on gold. Obviously, gold had run up significantly over the past 3 months and came back, cooled off, shook out some weak hands. Some people took profits along the way, like Rick Rule, who we both interview, took all of his risk off the table. Pretty much, he was able to sell 25% of his portfolio and de-risk the whole portfolio and just ride the profits or whatnot. And so, just curious in your take on gold and the gold equities.
Yeah, let me just share my screen one more time. This is the price of gold. I think gold is doing what it's always done in past bull markets, which is consolidate at the top. That's what it's doing right now, Darrell. It's happened in 2021 around here, and it happened in 2011. And both times in the past two bull cycles, gold fell at least, 31% in 2011 and another 20% following the crash in 2022. Mm-hmm. Both times they consolidated for quite some time at the bottom and then went up. It just so happens that this time, for a variety of geopolitical and economic reasons, gold didn't stay at the bottom for very long before it started skyrocketing to new all-time highs. Gold, I think, is going to consolidate around $4,000, maybe retrace 15-20%, and then either stay at the bottom for quite some time or continue going up, as it has always done in the past history. The question is just how long it's going to consolidate around $4,000, and to that, I don't know.
We've just made a discovery, the Thera discovery on the Poplar property. It's really captured the attention of a lot of people, including a number of majors. There's already a big resource base there at Poplar. We're drilling that out as we speak. So expect good, strong news flow from us over the next little while. You want to be invested before we start to drill our Copperview project. That anomaly we have there is outstanding. So I think that's a chance of seeing a major re-rate. You can find more about Vizsla Copper at vizslacopper.com.
And so when you're looking at, obviously you're looking at the charts here, what do you make of like some of the legends in our space? We got like Pierre Lassonde with high gold targets, Jim Rickers, Frank Justra, Rick Rule, so just curious in how do you factor that in and where you see gold going?
Well, Pierre Lassonde has argued for quite some time that we could potentially see a return to the 1-to-1 Dow to gold ratio, which could push gold up to $30,000 if, let's say, the ratio returns to 1. I think it's done that twice in history. Why that would do that? I mean, one could have a debate on that, but that's the core assumption or thesis behind the Pierre Lassonde's gold outlook. I just, before we talk about what these guys have told me and other people on other shows, I just want to note that even in the comments section, I read the comments on my videos a lot. That gives me a good indicator as to how regular people, viewers of the program, are feeling about any one particular asset. And a lot of people share my sentiment, which is that very few people expected $10,000 gold in our lifetimes. Mm-hmm. Here we are at 4,000. That's only a 150% increase from here, which sounds like a lot, but we had that in literally 18 months. So It doesn't sound impossible anymore. I remember when I first started interviewing people in the gold business a couple of years ago, people who call for 5K gold were labeled crazy. That's when gold was trading around $1,500. So you're talking about 3x being crazy in the next 10 years. Well, we're pretty much there already, almost. So no one's calling for that to be a crazy forecast anymore. Even the big banks are forecasting gold to continue grinding higher on the assumption that the Fed will continue loosening monetary policy, especially after the new Fed chair that will replace Powell is going to be more pro-Trump's policies, and two, central banks will continue buying gold. And if we have those two trends continue in place, then the trend for gold is going to be much higher.
Yeah. Any thoughts on silver?
Silver follows gold. So silver has proven that this time is really different from 1980 and 2011, because in both those prior situations, silver didn't stay above 50 for more than a couple of days. And now we're firmly consolidating around the $50 mark. I mean, give or take 49, 51, 54. But what is it at right now? It's at 49.98. So yeah, 50 is the new psychological ceiling for silver. And if we start to see silver break out above 54 and maintain 55 level, then that means that more momentum is going to be coming on the upside. But right now, it's just finding a floor around $50. But again, important to note, this hasn't happened before where it stayed around 50 for this long. Yeah,
for sure. Yeah, I've been doing a lot of research on the supply and demand of silver, and the industrial demand seems to be getting so strong, and the mining output and recycling is not keeping up with that demand. And then you also have retail and silver being viewed as the poor man's gold and such. And so, I've been just really looking at those supply and demand factors, and it seems like, I'm used to silver going up to $30 and then falling back to 20. That's when I got into this sector. And so I would experience a lot of those drawdowns, and now to see silver at 50, and then even some of the guests that I interview, they're projecting triple digit silver. Silver's the only metal that hasn't copper's broken out of its old range that it had a long time where it was bound to, as well as lead, and then silver has been the lagging metal. And so do you think triple digit silver is in the cards?
I want to answer that question, but I know it's your show, but I'm curious to get your take on why you got into the silver market to begin with. Anything in particular that drew you to hard metals?
Yeah, so I got in during the pandemic. So, I was scared out of my pants. Like what is going to happen with the economy? Many layoffs, everything shut down, all of that, right? And I wanted to take my financial future in my own hands, be outside of the banking system as much as possible, knowing that politicians can make stupid decisions that ultimately impact the average people. And so that was the reason why I got into gold. Silver was kind of like there as well. It was a cheaper metal. I didn't really fully understand it from a industrial aspect, but I knew it from I had learned about it from a historical monetary asset. And so as of recently, I started diving into the industrial demand, especially with the backwardation of the spot price of silver being higher than the futures market, because industry and investors want the metal in their hands now. And I started understanding okay, yeah, there's more to this than just when folks say silver is an industrial metal, looking at the mining output versus the amount of demand, and the demand continuing to grow, especially with AI data centers, EVs, solar panels, all of those different things. I could see triple digit silver in the future. And so actually I was thinking about selling my silver. If silver hit $70, I'm gonna liquidate. But now I think I'm gonna hold on to it. Hopefully I'm not proven wrong.
Look, a lot of people in this space know more about silver than I do. The people that have quoted silver as going to triple digits, Keith Neumeyer being a big proponent of the triple digit silver narrative for quite some time. He's basing his assumptions on a lot of things. One, that the historic gold to silver ratio will compress. Right now it's, I think, about 90 or something. And historically it was much lower, around even at 50, you're looking at triple digit silver, assuming gold doesn't move much, right? And then you have to ask yourself, well, why would it go there? I think if we have, so the demand curve for silver is going to stay relatively constant. We know what drives silver. It's industrial demand plus jewelry demand plus investment demand. Jeff Christian, CPM Group managing partner, has always told me that on the periphery, what moves silver, like spikes in silver in a shorter period of time, it has always been investment demand. Industrial demand drives long-term growth in the silver price. But if you're looking at really sudden spikes like what we had in the past year, most of that probably comes from investment demand. So on the industrial component, if we have a scenario in which silver supply dramatically drops and demand stays constant, where the demand growth stays constant, we're looking at major shocks to the silver supply, pushing it up close to 75 and 100. I don't know the silver market well enough to tell you whether or not that's going to happen next month or in 3 months. So until we see evidence of that, I don't think silver is going to $100 anytime soon. I mean, it took basically 15 years for silver to retrace $50 again. And then before that, 30 years. And all throughout the 80s, from 83, I'm looking at the chart right now, 83 to 2004, it was flat around $4 an ounce, $4 to $5 an ounce. $100 silver is not going to happen anytime soon. That's my forecast. If it does, it's because of massive demand increases from the investment side and or huge supply squeezes. Neither of these things are happening immediately. Gotcha.
Okay. Yeah. Appreciate that perspective. So thinking about, for me, when I'm thinking about silver and I'm thinking about this amount of demand, do you think that the silver being added to the critical minerals list by President Donald Trump, do you think that's a nothing burger, or do you think that manifests later on, years later?
It helps the mining companies that get tax credits. So it's a boon for mining investors for sure, especially the producers. And just this week, Trump added copper to the critical minerals list. So this happened a couple of days ago, actually. I think for similar reasons, the Department of Commerce has actually outlined why copper is considered critical. It's used primarily in defense. Not only is it critical, but it's critical for national security. They argue it's because it's probably the second most important, one of the most important metals, they argue, for the Defense Department. And I was looking at stats earlier today. So 45% of net copper consumed in the U.S. comes from, I know you're asking me about silver, but I'm drawing a parallel about the copper here. Almost half of the net copper consumed comes from imports. And depending on what kind of copper product you're looking at, a lot of that comes from Canada, and a lot of that comes from Latin America. China doesn't actually import a lot of raw copper or export a lot of raw copper, but they do have the world dominance in copper refining. So more than any other country in the world, China does most of the copper refining. So when you import refined ores and semi-refined products, a lot of that comes from China because they do control most of the smelters around the world. So what Trump is trying to do is, what he was trying to do with the tariffs on the copper price, the 30% tariff on copper in the summer, which he later took off, he was trying to incentivize copper production in the U.S. and U.S.-friendly countries. I think a similar case could be made for why silver was put on the critical minerals list, to diversify geopolitically away from, let's say, countries that are not friendly to the U.S. But to what extent it actually makes on the price itself, not much. I don't think that's the reason silver went up. I think silver was following gold, and I think that if anything, silver miners benefit from this more than the metal itself. Keep in mind, in Canada, where I'm from, silver is not yet put on the critical minerals list. That's been lobbied by a lot of silver executives, but not yet.
Okay, gotcha. Yeah, appreciate that perspective. So just as we wrap up today's conversation, what sectors, how are you kind of positioning yourself? Are you mostly defensive? Are you taking a little bit of risk? Like, how are you mostly positioning yourself with all of the knowledge that you receive, all of the research that you do? How are you practicing what you are learning and with your own portfolio?
So I'm not managing any money of my own right now. I have some crypto that I've accumulated over the years. I have Bitcoin and Ethereum and some Solana. Not much. I recently just added more to my Bitcoin holdings. I bought it at 100K. I thought, okay, it's come down from 120. 100 might be the psychological floor. I was wrong. I joke to my friends every time I buy Bitcoin, that's a topping indicator. But yeah, it's at 84,000 now. I primarily, for my own personal investments, it's mostly crypto for me, and I'm just holding. I'm not trading. I'm just kind of holding a long term. I've been accumulating ever since basically 2021, 2020. I'm not buying and trading anything else because I'm putting my money into my own business. Yeah. So I'm hiring people, expanding staff, and whatnot. But I'm not in the markets at all. Besides the little money I have in crypto markets. So I'm not, and that's on purpose. I'm gonna save my cash to grow my business once I'm comfortable enough with my own cash streams or cash flow from multiple revenue streams. Then I'll probably start to diversify. But my rationale is I'm going to invest in my own business rather than somebody else's business for now. So that's what I'm trying to do.
Yeah, that's good. Smart man. So are you a stacker?
My stacker? Yeah, I've got some silver coins that mostly were gifts to me from a lot of people that I'm never going to sell. They're pretty. I like it. So technically I am a stacker. I'm not going out to buy stuff because that counts as investing, which I'm not going to do. But yeah, I've kept all my silver coins. Got a big stack of them so far, and they're up a lot. I just don't have a lot to make a lot of money off of them. But I've been accumulating silver coins since like a couple of years ago, so they're up a lot.
Yeah. That's cool. Well, yeah, it's good to get to know you more, David. Especially the audience. I'm sure the audience listens to a lot of your show, even on the back end of YouTube. It shows which videos they're watching, and they're watching your show too. So it's always good to dive into the mind of some of the hosts that are doing this work. Because ultimately, I think that this knowledge that we're bringing, that the guests are bringing, needs to be promoted and shared with the audience out there. So appreciate you for coming on the show.
I appreciate you for doing this, and I'm gonna before I get going, I want to ask you, how do you like doing this? I mean, what's the most rewarding part of this job for you?
The most rewarding part for me, one is one of my biggest goals is to break generational poverty. Grew up in a family that didn't have a lot. And so my ambition is to change that for my family, my kids and everything. And there's a lot of different components that goes into that. Like as I study, books like The Millionaire Next Door and like how families that have generational wealth typically move. So there's a lot of different components, but ultimately that's my goal. And then also to educate those around me. I have a lot of friends that didn't have any investments, didn't have any retirement accounts, and I'm able to kind of help them navigate the financial realm and be able to protect themselves. I mean, because for me, like I think that ultimately we know history that the U.S. dollar is going to be around forever, and we know that gold has stood the test of time, has thousands of years of history, and then also there's also ways to make money along the way. So, helping my friends, family, helping the audience, and then also, I just feel good doing it. I like doing this. So, yeah, those are my ambitions.
All right, very good. Well, it's nice to meet you, Darrell, and thanks for having me on your show.
All right, you all, be sure to go subscribe to David Lin's podcast and his YouTube channel. You all know where it's at. Just look up the David Lin Report, and he will be speaking at VRIC, the Vancouver Resource Investment Conference. So if you click the link that is pinned in the comments below, you will be able to access the Vancouver Resource Investment Conference for free. Attendees get in free, so be sure to click that link in the description below. David will be there speaking and potentially moderating some panels. I will be there speaking, moderating some panels. So look forward to meeting you all in person. And thank you, David, for coming on the show. And until next time.
Thank you.